Welcome to Market News. I'm your host, and this is Friday, July 31st, 2026. And it's a big day to be listening, because today the tape told a story of four major themes playing out at once. Mega cap tech earnings, Apple, Amazon, Meta, Microsoft, all reported, and Wall Street reacted in a way that was as entertaining as it was confusing. The energy sector delivered its own mixed bag with Exxon and Chevron both in the spotlight. A deepening K-shaped economy where stocks gave back their gains was the macro backdrop. And woven through it all, a technical landscape that was heavily tilted to the downside. Let's break it down. Let me start with mega cap tech earnings, because that was the event around which everything else revolved today. Four bellwethers reported. And the one sentence that captures this day is Amazon and Apple both crushed earnings, yet Wall Street priced opposite futures for the two giants. Amazon surged nearly 4% to $235.50 on strong AWS momentum. Apple's earnings were strong too, but the company flagged slowing growth due to chip shortages, and the market punished the forecast. On the Apple side, it was a story of a company that continues to grind out impressive numbers but is now running into a tangible headwind: chip shortages. The headline from Investors Business Daily was blunt: Apple forecasts slowing growth due to chip shortages. The accompanying piece on Yahoo Finance went even further, framing the earnings call itself as a milestone, with observers calling it listen to Tim Cook's first and last earnings call as Apple CEO. So you have a company whose CEO may have just delivered his final earnings call in this role, and the market is treating it accordingly. Separate from the price action, Apple maintained its dividend policy, keeping things steady on the shareholder return side. But the momentum story is clearly shifting. Amazon, meanwhile, was the polar opposite. Shares jumped nearly 4% to $235.50. The catalyst was AWS momentum, and the market was having none of the negative free cash flow narrative. Multiple outlets ran pieces questioning why Amazon stock isn't getting bogged down by negative free cash flow. Stock Story framed it simply: Amazon shares skyrocket. What you need to know. Guru Focus and other analysts were described as warming to the AWS surge. The takeaway from the Amazon side was clear: cloud infrastructure demand is still the growth story investors want to hear. And on a broader level, Amazon's results reignited the debate over whether all the artificial intelligence capital expenditure spending across big tech is actually sustainable. That debate, by the way, sent data center builder ES jumping 31% because if AI spending can't be slashed, then the infrastructure builders keep winning. Meta was the third mega cap to grapple with sentiment today. Meta dropped 8% after a headline miss, but the chorus of analysts argued the result was structurally sound. Stock Story put it in a headline worth quoting: "Buy Meta's 8% earnings drop because this miss was not a miss at all." The market sold hard on the headline numbers. The narrative was about rising AI capital expenditures. But several analysts were framing Meta as having built a win versus win risk profile and pushing back on the sell-off. Whether you buy that interpretation or not, an 8% drop on earnings day is a serious event, and it's a reminder that even structurally sound results can get punished when the market's in a risk-off frame around capex. And then Microsoft surged over 14%, closing at $451.10, buoyed by data center investment themes. And yet here is the irony: despite that massive single-day pop, Microsoft is still down roughly 7% year-to-date. That is a headline that's been repeated across multiple outlets, and it's a reminder that even a 15% single-day gain doesn't erase a 7% year-to-date loss overnight. The AI infrastructure narrative was strong around Microsoft, and it was the strongest earnings story of the day. Now, let me pivot to the energy sector. Exxon reported second quarter earnings that missed estimates despite record production growth. That's a useful data point for energy investors. You can be producing at record levels and still miss on the earnings, which usually means the price of oil or refining margins are the problem. Chevron's outlook and broader oil market dynamics kept the sector in focus. The takeaway is mixed, and when big oil is mixed, it tends to reinforce the broader concern about demand. A related story in the tech space was Broadcom announcing it no longer frames itself as a chip cycle story. That is a major shift. Avgo, Broadcom, telling the market to stop thinking of it as a semiconductor cycle play underscores the broader tech transition away from legacy semiconductor narratives. The chip business is still there, but the positioning is evolving. Qualcomm was cited as having a next growth engine potentially ahead, with positive coverage from 24/7 Wall Street. And we have to put that in the context of Apple potentially continuing to rely on Qualcomm or move toward custom silicon, which has been a running narrative. The K-shaped story of the day was probably the most structurally important thread. Stocks gave back gains as Fed hawks pushed yields higher, and the divergence between winners and losers widened dramatically. Rivian sank 8% despite a second quarter beat and raised guidance. That is the exact K-shape. You can beat estimates, raise guidance, and still see your stock drop 8%. Lucid fell 6%. Tesla was reportedly considering spinning off its China business, which is a strategic move that suggests the company is thinking about unlocking value in one of its most important markets. And then there was AbbVie, which beat estimates but cut its full-year profit outlook due to its $10.9 billion acquisition of Apogee. So you had healthcare, autos, all showing winners and losers side by side. Now let's talk about the technical landscape because it was about as one-sided as it gets. Out of more than 10,000 technical signals scanned across 10,587 symbols, just 12 were bullish versus 38 bearish. That is an overwhelming skew. The top bullish names, FI, TRIB, DPGI, CSI, SGLI, they were all showing strong momentum up. But here's what is interesting. Every single one of those bullish names also appeared on the bearish side flagged for overbought territory or potential overextension. That is the same dynamic from yesterday repeating. The names showing the strongest upward momentum are also the names flashing the strongest warnings. It tells you that the market is not in a stage of broad conviction. It's in a stage of speculative pockets within a cautious macro backdrop. And then the magnitude of today's movers was striking. Vine was the single biggest gainer at an extraordinary 5,511%. Seaside jumped over 3,000%. Nexer went up over 1,300%. Ofel climbed nearly 930%. And on the volume side, Saiku traded over 645 million shares on a 496% gain. On the flip side, CCB crashed over 43%, BF fell over 38%, and Capper dropped over 36%. You are looking at a market where a handful of speculative microcaps are putting on extraordinary displays while the broader tape is tilting heavily negative. AMD also had a notable day, rebounding ahead of its second quarter report with HSBC raising its price target to $500 from $380, maintaining a hold rating. So you have a bullish analyst call on a name that's still framed as a hold. That's the kind of market we're in. And there was a piece suggesting AMD could see 155% upside expected by Wall Street, pointing to Microsoft's catalyst. Whether you buy that thesis or not, the conversation around AMD is clearly heating up ahead of the report. So here's the bottom line for this very eventful Friday. Megacap tech earnings delivered a masterclass in mixed signals. Amazon and Apple both crushed, but the market rewarded one and punished the other on very different narratives. Meta took an 8% hit, and while analysts argue the miss is overblown, the market is clearly nervous about AI infrastructure spending. Microsoft was the standout performer with a 15% single-day surge, even though it's still down year to date. Energy is mixed with Exxon and Chevron. The K-shaped economy is deepening with Rivian sinking despite a beat and raised guidance. And across the technical landscape, the signals are overwhelmingly bearish, with just 12 bullish versus 38 bearish out of more than 10,000 signals. Volatility is extreme on both sides, but the weight is clearly to the downside. That brings us to the end of today's episode of Market News. We'll be back tomorrow with another look at what moved, what mattered, and what's coming next. Until then, stay sharp, stay cautious, and we'll see you on the tape.